Hi, I'm Grant Steven.
And I'm Kris Bernier.
And we're the Two Investment Guys. Kris and I are going to continue our talk today around the various dynamics going on in the markets. Wanted to quickly have a look at the indexes from around the globe. We have negative returns practically everywhere in the major markets. Dow is faring the best at down about 1% or so. TSX is down 10% so far this year. Kris, a couple of the major European markets, France and Germany in particular, are down 20%. There seems to be almost no end of negative news coming out of Europe almost every day, particularly as it's relevant to the debt levels there, as well as the US debt levels. So clearly the negative sentiment continues. It's driving a lot of volatility in the markets. There appears to be no clear plan at this point in time on how to deal with these issues. But we did want to talk a little bit about the Canadian story, because it's a bit of a different story, Kris.
That's right. When we look at Canada as a whole, we are running at very high levels of employment now. We've recovered all the jobs that were lost during the recession. And a lot of that is related to a very strong economy that's based on a very solid commodity base. If we look at the emerging markets where most of the growth globally is taking place, they need a lot of the commodities, a lot of the stuff we pull out of the ground, and that's really been helping Canada with our fiscal situation.
Right. You know, to draw some differences, Kris, on many of these macro issues, Canada never had a housing bubble, although there are pockets of strong markets, but there was never a bubble that burst, certainly like there was in the United States. And the government here is running a very manageable deficit with plans to turn that into a balance in 2015, unlike the States, which really just can't get the political will behind something that brings them together by 2030. So the fiscal situation in Canada is much improved. And then, as you were mentioning, Kris, the commodity story is really what's driving a lot of the success behind the Canadian markets. Now, we're not without volatility here in our market, because if it's based on commodities, those pricing swings are fairly considerable day to day at some times. But, you know, Kris, when you look around the investment space, there are things in Canada that have done very well, like the pipelines and the REITs and some of the base metals.
Yeah, absolutely. And the oil and gas industry remains strong. We've seen a lot of investment out of Asia. Korean National Oil Company, Chinese National Oil Company stepping in and investing in oil and gas production here locally. We know that liquid natural gas plant is proposed to be built in Kitimat. Pipelines are being proposed to run some of these products to the coast to be sold overseas. And these are all very positive developments going forward for Canada, because it's another step forward in reducing our trade with the US on a percentage basis and increasing the diversification of the business we do around the world.
Right, because we are an export economy. 80% of what we produce does go to the United States. The more we can move goods into these newer markets that are the markets that have some growth, because really what we're talking about here is growth in the economy, the more diverse things are and the better the fundamentals become. If you look around the world at one of the best situations to be in, it's actually the Canadian story.
But we're not an island, and we need to remember that we do have the U.S. as our largest trading partner. So, you know, despite the fact that we have very solid fundamentals, we still need to be mindful of the fact that what happens in the U.S. still has a fairly significant impact on us here in Canada.
That's true. So, Kris, we get to the point where we say, what should somebody be doing here? Well, not necessarily anything, because we get that quite a bit on some of the news feeds, that it's almost like you should be doing something every 10 minutes. But it's probably a good idea to have a look at the portfolio. If you're a Canadian investor with a high level or 100% of Canadian dollar spending need, then you're probably in the right market if you have a broadly diversified and well-balanced portfolio in many of those Canadian names and sectors that are driving yield in the portfolio. That's the kind of thing that you should be looking for in the portfolio.
That's right. Make sure you talk to your advisor about some of these aspects of your portfolio. If you're experiencing a lot of volatility, where is it coming from and how can it be reduced? I want to thank you for your questions and comments. Please keep them coming. You can contact Grant and I at TwoInvestmentGuys.com.
Join us next time. Kris and I are going to continue our discussion of the markets and the volatility. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.